This is the best entry pattern you would ever need when trading the foreign exchange market. Welcome guys to another amazing and exciting video brought to you by Learnity. In today's video, we're going to be talking about the best entry technique you actually need to trade the financial market. And in this video, I'm going to be showing you the only entry technique that you would ever need when trading any market, be it the forex market, the crypto market, or even the stock market. So no matter the model you trade, be it smart money concept, ICT concept, or even support and resistance, this entry pattern applies to all of that, and I'm going to be showing you how you can use this entry pattern. So make sure you watch to the end of the video and keep away any form of distraction. The entry pattern we are going to be discussing today is the breaker entry pattern, and I'm going to show you how it looks and how we can use it regardless of your model or your style of trading. If you're a swing trader, you're a day trader, or even a scalper, this pattern exists in every model because it exists almost everywhere on your price chart. What you need to do is identify this pattern in the right direction and you are good to go. But before we dive into talking about the breaker entry pattern, if you are a newbie, you're just getting started in the foreign exchange market and you do not really know what a model is, or you have not come across ICT concept, smart money concept, or even know what support and resistance is, which are the basics, right? There is currently a 5-day free forex training program ongoing at Learnity, and in this training program, you can get to know everything there is about the foreign exchange market. You can learn the tools you need to get started in the foreign exchange market, how to sign up an account, how to open up a brokerage account, and everything that you really need to start your journey in the foreign exchange market. And you can simply register for this training program by using the link in the description below so that you save yourself the spot for this 5-day free forex training program. Now, what is a breaker entry pattern? It is actually something that looks like this. All right, it is a model that actually takes out liquidity or fakes a run lower or higher and then moves in the opposite direction. Now, why is this entry pattern so powerful? It is because of the sweep of liquidity before a change in the direction of that market structure, telling us that some side has been trapped and then this move is going to be a very long move. All right, that is just a random explanation, but when we dive into, or when we go onto a live price chart, we are going to explain more on this. But this is just a typical diagram of what the bullish breaker looks like, and this is what the bearish breaker looks like. So we are going to expatiate more on this on the live price chart, and that is what we are going to be diving into right now. So over here is the XNES web terminal platform where you can carry out your trade. So if you are trading and you're not using XNES, then you are actually missing out, because XNES is one of the best brokerage firm out there, especially for us traders in Africa. Right, so you want to trade with XNES because they have the best spread, they have low entry barrier, you can deposit as low as $10 to even get started when trading. Right, so to get started with XNES, you can actually use the link in the description below to sign up and register your XNES brokerage account, and you get to enjoy the same benefits that I do enjoy using XNES. All right, so right here we have the AUD USD chart, and I'm going to show you what the breaker pattern looks like. All right, so if we dive over here, remember we said there are two types of breaker pattern. We have the bullish and the bearish. Now obviously the bearish is for when you want to take a sell trade, and the bullish is for when you want to take a buy trade. Now knowing this pattern does not mean that you just go into your chart and you start looking for that pattern repeatedly. What you need to do is you need to understand that you need to find the direction of the market before you even start looking for that pattern, because that is just an entry pattern, right? It does not teach you about the direction of the market or where the market is headed. So before you use that pattern, you need to already know where the market is headed, and you just use that pattern as your entry purpose or your entry criteria. All right, so if we go back to the daily time frame, all right, we can see that this price is currently making what, lower lows. You can see we have this trend line 2 here, which means that these lows have been taken out, which means that we are quite in a bearish or a downtrend. All right, so give me a minute to just remove all of this and to be clear. All right, so the chart is more clearer now, and then we can talk on this. So you can see how this trend line is showing us that new highs are not taken or are not broken, but instead new lows are being broken, which means that the direction of this is actually more bearish than bullish. But another important thing we can see is that price has actually run into this area, right? We can call this area a supply area, because this was where previously we saw a huge rundown of the market. You can see this very strong bearish down close candles and how they actually went down. So this can be your area of supply, or as ICT traders might call this, your bearish order block. And we can see that reaction on this day, how price actually traded into that area, into the bearish order block, and traded and closed with a bearish down close candle. So on this day, what I was looking for was just the entry pattern, which is the breaker entry pattern, because that pattern is just what I'll be looking for if I have my direction right. And remember, the breaker pattern would look like this. All right, so it should just take out liquidity and then change or a shift of market structure. Now, if we dive into the 4-hour time frame, we can see that clearly. All right, would be able to see how the market actually took out liquidity and changed structure. All right, we would go into the 1-hour time frame so that we can see that clearly. All right, so if you go into the 1-hour time frame, we can see this over here. But now this is not clear because we are actually using what our candlestick charts to look at this. Now, to make it simpler for you to find your breaker entry pattern, you need to switch to a line chart. And in order to do that on the Excellence platform, you need to come to this area where you have this candlestick. You click on it, and then you'll be seeing some option to either choose different type of option, right? You can choose the bar, you can choose the hollow candle, volume candle, anything, but you want to click on the line. Right, when you click on the line, it's going to give you this. So you can see that over here we have this high higher than this high, and then we have what the breaker over here. Remember, if we go back to our slide, the breaker pattern looks like this. All right, we take out liquidity above this high, and then we shift market structure, we trade back into that area, and then we drop down. It is actually the same thing over here, just a little bit different. In price action or on a live price chart, it is not going to exactly look how it was on your typical diagram. Right, so that was what we had over here, and typically you would want to be entering around somewhere here, which is where the breaker exists, and you want to trade and go short, that was what I was looking for. Right, that was what I was looking to utilize, that was what I was using to trade, and typically that was the logic I used in getting into this trade. And if you see the entry or the open position, you can see right where it was. That was very easy to actually identify. And let's move on to one other example, which should look for a bullish example so it will be more clearer. So over here we have the United States Canadian dollar chart, and if we look at this, we can see that a breaker pattern is actually starting to form. But first, we need to understand the logic. We need to understand why we'll be looking for a bullish breaker pattern. Simply because we now think that price is ready to attack all of this high. So we've seen price drop down into this low here, which is a weekly fair value gap. And if we go onto the weekly time frame, we can see that very easily. So we have this weekly fair value gap here, which we know is a form of internal range liquidity, and we know that price moves from internal range liquidity to external range liquidity. And please, if you know that all of these concepts I'm talking about are going over your head, then you need to actually get educated in this course, and that is why you need to get the Learnity Advanced Forex Trading course, or the Learnity's ultimate course for beginners, because all of this concept has been taught in those courses. So whether you're talking about ICT fair value gap, you're talking about breaker block, you're talking about support and resistance mitigation blocks, all of these concepts have been taught in those courses, and they will help you very much to get in line with everything that is currently happening in the market, and how you can use all of this logic to trade in the best way possible. So we've seen price drop into the weekly fair value gap, and we know that if price drops into an internal range liquidity, it is going to seek for what? An external range liquidity. Now all we are simply looking for is what? A shift in market structure, and the best shift in market structure you can look for is our bullish breaker in this scenario. So if we turn this, or if we go into the 1-hour time frame and we turn this into a line chart, you can see we have a typical diagram here, price running these lows, hitting the internal range liquidity, and doing what? Shifting market structure. So everyone who has been selling over here and has not taken profit will actually be trapped if they have not taken profit, and they will actually be in a loss. And that is why we are simply going to be waiting for price to just drop into this mitigation area, and then we tend to buy, just like the bullish order block implements. We have seen price drop down over here, taking out this liquidity pool, and we are seeing that expansion now. All we simply need to do is wait for price to drop down into this area, and then we buy and we wait for an expansion upward. That is the logic. All right, so it is pretty simple if you understand the concept and if you know how to find your narrative, your bias, and your logic. All right, all of these play a very big concept in using this entry pattern. So you don't just go into the market looking for that entry pattern. There need to be logic behind it. There need to be some reasoning and why you are going to be looking for that entry pattern. And like I've said, if you want to learn how to actually understand logic in the foreign exchange market, you want to learn how to derive your bias and how to follow narrative in the foreign exchange market, do well to give our courses a try, the Ultimate Forex course for beginners or the Advanced Forex Trading course, and you would know how to easily identify logic when trading and how to use the logic alongside other entry patterns when trading. So this is it for this video. If you've actually gained a thing or two, do well to give us a thumbs up and also follow us on our social media accounts on Facebook, on Instagram, and also on TikTok. And if you have any complaints, if you need any guidance, you can actually reach out to the phone number displayed on your screen or send us a mail at coinlearnity@gmail.com. Thanks for watching, and I'll catch you later.